Home Finance Professional is a comprehensive home finance application that covers affordability, meaning how much of loan amount can you afford, amortization, it calculates interest rate, calculates balloon payment, you can compare loans, you can calculate closing cost, you can find out the duration if you are paying more, then how much of income you would need to qualify certain house or purchase certain house. And what if analysis allows you to perform what if analysis by providing three variables. You can actually calculate the fourth variable. Let's go through each of them. Affordability, say annual income is 150,000 and now monthly debt payment is 500 and available cash for down payment is 40,000 and property tax rate is 3%. Home insurance is 0.05% and interest rate is 5%, and we are assuming the loan term is here is 30 years, but you can actually change it. The PITI debt ratio is 28%. That means payment, tax, insurance, that's basically what you are paying to the on a required house payment related payments, and the total debt ratio is 36%, but you can also change that. So typically these are the areas where the lenders actually cap it. So let's see. So this says the loan amount we can afford is 469,000, and here are some of the details. In this case, looks like we are going to pay some PMI, and it is also providing the details of that. Amortization, we can actually supply the purchase price, closing cost is $15,000 is a nice calculator. You can actually use that to enter the data. Then down payment is 115,000. So then association fee, say it's a single unit, no association fee. Annual insurance is $1,500, 1500. Then annual property tax, say it is 18,000, and loan term is a 30-year term. Interest rate is 5.375%. Then payments per year, say we are making 24 payments a year, paying twice a month. So we are making some $200 extra payment in a month. Payment actually start date, you can actually change that to whatever you would like to, and it will start from that day. So now let's calculate. So the actual loan amount is 475. That actually calculated. Now monthly principal and interest payment, monthly other payments, and your total monthly payment, and then total payment, total interest, number of actual payments, reduction in term because we are paying a little bit extra, and this is the amortization schedule. So over the period loan term, then this is the principal versus interest. This is the how the various balances look like over the term of the loan. If you want to save the data, the result to the SD card, you can actually do that. Okay, and now if you want to really email the result, you can also do that way. If you want to erase the data, this is how you do it. To exit from this, either you can use the backspace, the return back button, or you can also use this. APR, say loan amount is 575,000. So the loan term is 30 years. Next, quarterly interest rate is 5.375. Points is 1%. Closing cost is say 15,000. And here our APR is 5.70, and this is the details. Okay, we covered APR. Let's talk about balloon payment. In here, say 575,000 is the down payment. We pay 100 20%. You can either specify the actual dollar amount or you can specify percentages. Say amortization over 30 years, and we balloon payment, say it is after 15 years, and the interest rate is 5.375, and this is the balloon payment amount, and this is the amortization schedule, the pie chart, and this is the balloon payment amount. This is how the various balances look like over the term of the loan. You can also save the result to SD card. You can also email the result as an attachment. Now we can actually compare one or two or more loans, say 30 years and 575, blah, 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 and your 5% interest rate. Say we are paying twice a month and extra 30 or 300. We added that. So now let us say you took a 20-year loan and 4.5, and we are basically making 12 payments a month, and we're not making any extra payments. So we add that and we compare. So this is how they compare, and this is the payments look like. This is how the total payment and total interest look like. Okay. Then loan cost. What is the closing cost on the loan? So loan amount is 575,000. Your loan term is 30 years, and quarterly interest rate is 5.375, and the quarter APR is 5.70, and then the closing cost of that is this, and then details is this. Then duration, say 575,000, interest rate is 5.375. We can actually do input two things. One is the desired monthly payment, or we can actually specify the loan length. Along with that, we can say payments per year and optional extra payments. Say desired monthly payment is 5,000. So let us see. So it says that actual payments is 162, term is 13.5. So this is how it looks like, the principal versus interest. This is how the desired duration, actual duration actually look like. So now, say we are making some extra payments. So we're making extra payment. Okay, see, this is what happened. So now let us say the desired is 20. Yes, so this is what we are saying. This is what it is. Okay. Now let us not specify the desired amount, so we specify the rest. Okay, this is it, and this is the okay loan. Then qualification, that means how much of income you would need to qualify for certain house. Say monthly interest and payment is that, say this is 2,500, property tax is 1,500, your insurance is 1,500, property tax is 15,000, and your debt payment is 3,000, and your property price is 575,000, and then your down payment is 40,000, sorry, 150,000. And now what happens is this, qualifying income is a big one. So now let us say monthly debt payment is 500, and that should have an impact, and we see this and we see this. Okay, now we can do what if analysis. So let us supply three variables, say for interest rate and the year term. So it's a payment. So now say 698.24, we are not going to supply interest, we'll calculate interest. Let us see interest. And now let us say we are supplying interest, not time. Let it calculate the time. So okay, now let us say we want to find out the principal. So this is it, principal. Okay. So with this, we covered affordability, we covered amortization, we covered APR, balloon payment, comparison, cost, duration, qualification, and what if analysis. Thank you very much.